Swayam Prabha. Digital India. Educated India.
I extend my warm greetings to all of you. Once again, I would like to welcome you, my dear students, on the lecture series Law of Banking and Negotiable Instruments. Dear students, hello. I am Dr. Raju Majhi, Assistant Professor, Faculty of Law, Banaras Hindu University, Varanasi. As I am discussing with you the very important part of as a legal scholar, that is law of banking and negotiable instruments. As you know that it plays a very significant role. We have discussed many things. So, under this lecture, I have taken the various types of securities to the banker. So, to better understand, I have planned to discuss with you that this particular chapter, or you can say the lecture, which is discussing, I am going to deliver the entire things, the various types of securities to the banker. So, in the three heads we will see, it is a very simple, if we have seen in the previous chapter, because that is related with that. In the previous the lecture we have discussed about what are the advances, what are the loans, how the types of the loans, what are the principles. On the basis of that, we will discuss this, that when that the principles is applied by the banking sector to ensure that what kind of the securities bankers is accepting from its borrowers, that is very important, as you have seen. So, in that by taking all the things, I have willing to discuss in the three heads to ensure that the securities are very important part of the banking law, and as far as the banking is concerned, the banking company is concerned, they will have to ensure, that is their loans and advances by taking proper kind of, you can say, the securities, and that is why we will discuss the various kinds of securities, the advantage and disadvantage of the various securities, and what is secured and unsecured. I have taken only the three aspects. I have taken these three aspects in a very you can say the simplest way, and I hope that if you have go through the previous lecture, that is the loans and advances, which is very important. So, to meet out the loans and advances, this lecture is also related, or you can say relevant. So, as I have told you that I will discuss in the three aspect of it, that one, what are the various kinds of, you can say, securities which is accepted by the banker from its borrowers, and we will see at the same time that the securities which is accepted by the banker from its borrowers. So, what are the merits, demerits, or what are the advantage and the disadvantage, we will discuss that part, and finally, we will see that because the secured and unsecured, these three aspects, the three things we will discuss. So, let us have to discuss the types, or you can say the various kinds of securities. But before I discuss the various kind of securities, why security is required, that has to be understood, and when we are accepting the securities, what things must be there. So, that when we are accepting the securities as far as concerned, then I have told you the liability of a banker, because the banker's liability lies towards his customers. A reason behind it, as we have seen, the banking sector or the banking company which he involved to discharge, or you can say carry, or to run the business, that is entirely you can say the money which is deposited, or the banker which is accepted in terms of the deposit from the public. So, its liability lies towards the depositors, that he has to return. How? That not only return, but he has to pay some sort of the interest. But when we are talking about to pay some sort of the interest in every kind of, you can say the deposits which you have, except the, we can say the what, that is the current account. In every kind of the deposit, when the banker is accepting, the banker has to return along with the interest. For example, even in the savings accounts, the banker has, of course, there is a very nominal rate of interest is provided by the banker, but there is a provisions that he will give the return, that is in terms of the interest, that is simple interest. But when he is accepting the other deposits like the fixed deposits, the recurring deposits, the terms deposits, or any kind of, you can say the under schemes like this, you can say the other maturity benefits he has to provide. So, and when he is returning that the money, he has to return with the interest. And now how the interest will be returned? That means he is investing money somewhere, and or he is lending the money somewhere, and he is getting high rate of interest from there, and then from that, by meeting its own requirement, as we have already discussed, that the banker or the banking company to run its affairs, he needs some sort of, you can say, the infrastructure, he needs some sort of, you can say, the amenities, he needs to carry out that business, he is employing some sort of, you can say, the people or the employee. So, to meet out their salaries and the other things, what he has to do, that he has to generate funds. He must have some sort of, you can say, the earning prospects, and that is one of the, you can say, the sources or the means which is available in the hand of the banker, that is providing the business or do properly the business which is entitled. And the banker, as you have told you, the choice is not available in the hands of the banker. The banker has, or the banker can engage himself what kind of the business? The business which is already we have discussed, the business which is described under section 6 of the Banking Regulations Act. Beyond that, the bankers cannot or you can say the choice or privilege, the discretions is not available to the banking company that he can involve or engage himself, because very specifically under section 8 of the Negotiable Instruments Act, it is prohibited, and simply the subsection 2 of section 6 also talking about that the bankers can engage only those business which are prescribed under subsection 1 of section 6 apart from its main business. So, that the main business, as I have told you, that its main business is to lend or invest that money which is received by the banker from the public, and at the same time, the, as I have told you, under section 31 of the Negotiable Instruments Act, it is very important that we have seen that is the to honor the checks, and the honor the checks means the banker's liability is to, whenever the customers as a creditor demands towards its debtor, the bankers is liable to return that money. So, with that background, just as I have told you that it is very essential, whenever the banker is granting some sort of the loans or advances, he has to ensure that the security. When we are talking about the security, then some of the essential characteristics of the security that is very important. The first and foremost thing which is very important, that is entitlement. Are the persons who is depositing anything, so the bankers has to ensure that whether that is, you can say that the persons is entitled to it or not, means the titlement has to be ensured. As for example, suppose if certain things we will discuss at this moment, then I can tell you, suppose you have taken a particular document, what we can say, for the immovable property. Now, when you have taken that immovable property, and suppose it is given by the borrower, and that property, his name is of course there, but it is a joint property. So, if I concern, when we are talking about the landed property, that is in our country, there are various personal laws for that is governed by the Succession Act. For example, that the Hindu have there the Hindu Succession Act, the Muslims have there, that is also governed through their personal law. So, every, you can say, the community which will have, they have their own personal law through which their ancestor properties are you can say the governed, or it will gives the entitlement. So, unless and until that you know that it is self acquired, or you can say the persons is independently that the title over that, you cannot ensure that if any wrong thing happens, that the bankers cannot reach that he can sell out that. So, for that purpose it is very important that you will have to ensure, what you will have to ensure, that the titlement of that property. When you are taking any sorts of the goods, etc., then you will have to ensure that the loans amount which you have given, that at any time, whenever that it will be realized, at that time you will have to ensure that that amounts will never go below that the amount which have given. So, apart from that, you will have to see that the goods or the securities which you have taken, there is less risk, and in the terms of the lease, as I have told you, that the entitlement you will have to check it. The second one, as I have told you, that the amount of the realizations at the time of the end of the, you can say, the term of that loan, you will have to ensure that. So, by keeping all the things, as I have told you, that if you see, there are 10 kind of, you can say, the securities which is normally or generally it is accepted by the banking sector when he is granting the advances or loans to anyone. These advances or loans which is granted by the banking companies to any of the borrowers, as I have told you, that always he will follow the principles of the sound lending. That is very important, and that is why it is related when we are talking about that what should be taken into consideration as far as concerned to accept as a security. That is very important. As I have told you, that the one that is the safety is very important, and when we are talking about the safety, that means you will have to see the security which is going to be deposited or handed over to the banking company. At that time, the banking company has to ensure that the things which is going to take from the borrower, whether the borrower is entitled or not, his entitlement has to be checked and what capacity he is entitled. Now, at the same time, when he is taking that security, he has to ensure that the value of that security. At the same time, he has to ensure that the things which is taken, that after 10 years what is his perspective, that has to be taken into consideration, and he has to find that it can be sell out, because the banker had the right to sell out as a by exercising the rights which is granted to the banker as a general lien rights. So, they are the 10 kinds of, you can say, the securities which is normally accepted by the banker, and these are in either way for each and every loans, as we have discussed, the loans which are the style of loans or the loans in what forms it is given or provided by the banker. Accordingly, these can be, or you can say, the security by taking that loan can be insured. So, the one that is the land or real estate, that is the first you can say the things which is accepted by the banker as a security from the borrowers, that is land or real estate. The second one is stocks and shares. The third one is debentures. The fourth one is goods. The fifth one is life policies. The sixth one is gold loan. The seventh one is the book debts, and eighth one is the fixed deposits. The ninth one is that is supply bills, and the last one that is vehicle financing. I am coming to one by one, but again, as I would like to mention here before going to describe all things in details, let me explain few things which I would like to put before you. As I have told you that whenever the banker is going to grant any kind of the loans and advances, then he has to at least that he has to keep in a priority basis that his interest. His interest is not only to earn the profit, his interest is to return the money of the depositors. That is very important. So, unless and until he will ensure that the persons or where he is going to invest that money, that will give returns, or the persons to whom he is giving money, that persons in a position to return that money. That is one of the foremost, you can say, the assignment which is in the hand of the banker. Banker has to ensure. And the second thing, as I have told you, that the cardinal principles which you have seen, that is the profitability. The profitability, as I have mentioned earlier also, that the bankers has its own expenses as far beyond the return the liabilities towards its depositors. Apart from that, as I have told you, the bankers, when he is managing its own affairs, he is employing the persons, he needs salary to pay their salaries, the infrastructure, he needs the buildings and the others amenities. So, for that purpose he need, or there must be some sort of, you can say, the earning perspective, so that he can meet out all the, you can say, the burden which lies towards the banker. So, the profitability has to be taken into consideration. And the third things, as I have told you, that is the bankers has to, the diversification of the risk, it is very important. Again and again I am reiterating it, the diversification is a very interest. The banker has to take one very, you can say, the important things whenever he is investing money or granting advances. The bankers has to be diversified in this particular issue. The bankers shouldn't confine or concentrate on a particular type of business or a particular kind of businessman. Otherwise, the bankers is going to lose, you can say, if any kind of, because the wrong thing happens with a particular industry or a particular kind of business. So, that is why the banker has to open the various windows, that so that in the needs of the time he can meet out that or he can save his life by using the other windows. If suppose in a room, if there is only one door and there is no window, then it will put you in, you can say, the problems, if any kind of, you can say, the mishappening is taking place. So, for that purpose the bankers has to diversify its risk, and it can be, you can say, the meet out how he has to deposit the money or grant the loans and advances for you can say that the different natures or the different kinds or the different kinds of businesses. Now, the first one, as I have told you, that the land and real estate. And nowadays, if you will see, that is a very important the things, because most of the time the bank, there are institutions which they are working, that is for the development of the land and the other things, and the bankers, whether they can, if the someone who is working on that particular area and he is willing to give the security of that land, so whether that can be accepted the bankers or not. The answer is yes, the banker can accept it as a security, and it is one of the very important security nowadays. The reason behind it, because when we are talking about the landed property, you can find that this is one kind of the property that in two sense, when we will discuss. The one sense, that is it cannot be taken out, means it is a immovable one. So, the land, once that you got it there where it is situated, it will remain there, it is a permanent one, it cannot be shifted. So, for that purpose what you required, you need only that the entitlement of that land or the building which is there. You cannot remove in a day, but in the other things which you can remove, that is if the movable property, that might be in the friction of second you can do that. But as far as concerned, that the real estate, or you can say the land property, that is one kind of, you can say. And the second aspect of this is very important, that the amount, that is the value of, you can say, the present value, we are experiencing that its value is always increasing. We cannot take like this, if suppose if you are talking about any kind of the electronic devices, then we have experienced in our lifetime that the mobile phone which prices and the 5 years before, or you can say the 5 years before, you can find that was 10,000, but the same kind of, you can say, the model, same kind of, you can say, the appliances, it is available in the present time, you can see that the 2,000. If you have taken some kind of security, the particularly that kind of industry, then it might be, it will put in a problem. So, that is why you will have to insure it. So, the bankers in the olden days were very much adverse to accept land and building as a security, because at that time the bankers they wanted to the different kind of, you can say, the property, that is particularly the bankers were concerned about the movable property like the other the securities which will have. But in the present time, if you will see that it is prejudiced over a period of time change, and land and building as a security has become an acceptable collateral in most advances, more particularly to corporate customers. The advantage and disadvantage of this form of security cannot be universally applied to all lands, and it depends on the nature of the land offered. So, naturally that in a particular place like this, a metropolitan place, the value of land you cannot imagine it, and it varies, that is why it varies from place to place. So, accordingly that the amount which is going to be sanctioned to the borrowers, it will be evaluated on the basis of it. But as far as concerned, as I have told you that nowadays if you will see that it is very easily accepted by the any banking company. If you are owner of any land, or you can say the state property, then if you are entitled, if you are your entitlement is on the above there, then and if you will present it before the bank will accept it as security, and the bank will not deny to grant the loans or advances by taking that security. So, the two very important you can say the advantage of this security is, as I have already shared with you, but again I would like to mention here that the advantage of the land has over other types of you can say security is that its value generally increases in time. With very fall in the value of money, the value of land goes up, and due to its scarce availability in developing areas, its value is bound to increase. And the second one is it cannot be shifted, a fact which sometimes is also a disadvantage. Now, the two things as I have told you, that is one of the you can say that when we compare with the other kind of securities that is not available. The two things which I like to again I would like to reiterate before you. The one thing as I have told you that as far as the value, when one of the principles which you have said we have read or discussed earlier that is the profitability. As far as the getting or accepting or taking security the landed property nowadays if we will see, then it is we are experiencing that every time, because the value of money is decreasing. As far as the value of money is decreasing, that means the value of the rate of land is growing high. So, there is high return you can find as far as concerned that and the people are investing nowadays. If you will say that the people do not interest, they are not showing their interest to invest like the in the olden days or the earlier. There is general practice the people willing to invest their money in gold property, but now they are willing to, if they have the surplus money with them, then they are willing to they are not preferring to you can say the buy any kind of mutual fund, or they are not willing to you can say that to invest on the term deposit or the fixed deposit. Earlier that were very preferable by the customers of a banker, but nowadays the people they are willing to invest their money not only in the all the things, but they the most preferable the assets where the people are preferring that is the land property, the landed property. That is the reason behind it, because the market value is very you can say that increasing on a very high rate. So, that is if you are taking as a security at the time, if any misfortune happen, then you can get the best result by sell out that. And the second one, as I have told you, that it cannot be shifted, but at the same time that if it cannot be shifted, it is a permanent one, but at that time it might be the demerits also. If suppose the bank is situated, or suppose that place was you can say that the if we take some example of some kind of, because the cities which are situated for a particular purpose, and suppose that by any region that particular purpose ended, then you will find that the value of the land of that place is also decreasing gradually. That is the region. So, in that way we can say that the disadvantage of it also. The major disadvantage of this land security is that the valuation is at times difficult. As I have told you that okay, its price is going up, it is all right, but the value of a building depends on the several factors such as location, size of property, state of repair, amenities, etc. And in the case of factories and industrial buildings, the machinery, the nature of industry, etc., this makes the evaluation difficult. And the second one is that is ascertaining the title of the owner. As I have already discussed with you, that is very important as far as concerned that when we are talking about, the banker cannot obtain a proper titles unless the borrower himself has title to the property of the mortgaged. As I have already mentioned you that particularly as far as concerned in our country's status is entirely different, and the persons they are belonging to the different religious, and every community, the religious, they have their own personal laws and they are governed by that, and which varies, we do not find any kind of the universally. So, unless and until the person is independently, or you can say the individually entitled to have the right over that property, the bankers cannot claim that is own property at the time of, you can say, selling out it. Now, the stocks and share, another very important aspects which we are talking about as far as concerned, which is accepted by the security by the banker when he is granting advances, the loans. These may be classified into the preference shares, as we know that which enjoy the preference both with regard to payment of dividend and repayment of capital. The equity shares, the preference shares and the equity shares, that is shares which are not preference share. While banks normally accept only quoted share as security, promoters share which are not quoted are also accepted as security in order to prevent promoters selling the same. So, the another very important you can say the documents which is accepted as the security by the bankers, that is the stocks and share. Now, at the same time that when we are talking about the stocks and share, as far as concerned that the value as in comparison to the first one, that is the landed, then you will find that it is entirely depend on the prosperity of the particular industry, or you can say where the shares or the debentures belong to that. If you will recall then that the steel industry, they were found in the very good positions, but the later on we find even the Tata Steels or the big steels industry, you will find that their rates were turned down to very below. The reason behind it, because the market is affected, and so entirely that the shares and debentures value is depended on the independently, we cannot understand that it is always dependent with the prosperity of the concerned industry, but it is accepted in a very. So, there are certain advantage which you will have, at the same time there are certain disadvantage of this kind of, you can say, securities when you are accepting, the banker is accepting their stocks and shares as a security. There I have highlighted the 5 very important you can say the advantage of the security as stocks and share. The first one is value of the security can be ascertained without any difficulty, because whatever may be, I am not talking about whether you are getting the good price or not, that is not the issue, but it can be ascertained because it is already available in the market, it is decided or determined by the company itself. Every time you will find that that is determined by the stock exchange, and it is available in the hand of the public that what is the cost of that shares of a particular company. So, it is very easy as far as concerned to determine the you can say the value of that security. The second is, in normal times the stocks and share enjoy stability for value and are not subject to the wide fluctuations. In the normal conditions we find that their prices are very stable, maybe the 1 rupee, 2 rupee variations you will find, otherwise there is very stable. So, in the circumstances it will help you to know that what is the value of your security which you have written with you. The third advantage is the stocks and shares requires very little formalities for taking them as security, as far as concerned that there is no, because it is already mentioned the owner's name, who is entitled to that, the share belongs to the whom. So, shareholders names, address, details, it is already mentioned there. So, there is nothing to be, means it will not take any kind of the time to ascertain or certify. The fifth one is, it is easier compared to real estate to ascertain the title, more so with the advent of the depositories. And lastly, we can see the being a tangible form of securities, they are more reliable. But at the same time, every coin has 2 sides, and if there are merits, so naturally there are some demerits also. The sum of the disadvantages which I like to cite before you, in as far as concerned the being easy to realize, they are fraud prone, and as such they must be properly secured, because if it can be easily sell out, that there may be chances of the fraud of it. The second the disadvantage of this, that in the case of partly paid shares, the following demerits are there. The banker may have to pay the calls participated shares are subject to violent price fluctuations and they are not easily realizable because of the restricted market of such you can say the shares. So, there are the two regions which I like to mention before you that you can say the major demerits of it or disadvantage of it. The one thing as I have told you that there is a chances of fraud, and the second thing is very important that if in case of the partly paid share capitals, the remaining amount has to be paid by the bankers, and sometime the bankers because the bankers is busy with its own affairs, it suppose in any case if miss out, then the bankers will not get the real or actual price of it. The debentures, it is another very important, you can say the popular documents which is accepted by the security as far as concerned the bankers is accepting as one of the you can say the prominent kind of the securities. So, naturally it has some sort of the merits and demerits, that is why bank prefer. As you know, the debentures is a document which issued by company acknowledging its indebtedness to the bearer or the registered holder. A fixed rate of interest payable at stated periods on such debentures. In the case of mortgage debentures, a charge is created on the assets of the company issuing such debentures in favor of a trustee who is responsible for to take care of interest of individuals investors. Again I am telling you that it is also a document. The debentures is a document issued by the company acknowledging its indebtedness to bearer or a registered holder. The persons who has registered and the debentures should be allotted to him. So, he is entitled to get that. On the basis of that, the fixed rate is allotted, and in that way we find that there is less risk as far as concerned to accept as a security. So, the advantage of it, that the first one is that is easy to sell, I will explain. The second, not subject to violent price fluctuations. The third one is they can be transferred to minimum cost. The fourth one is bearer debentures are fully negotiable, and the fifth one is they rank in priority to shares and mostly secured by charge on the company's property. But there are some disadvantages also. The first and foremost disadvantage is that if interest is not paid regularly on the debentures, it would affect its price and marketability. The very important thing is that the interest is not paid regularly on the debentures, then it would affect the price and marketability. That is very important, and that is the one of the you can say the demerits of it. The second one is if the charge on property of a company is not registered, the subsequent charges will get a priority. And the third one is debentures may be issued by companies having no power to borrow money. So, that are the some of the major disadvantages as far as concerned when we are talking about the or banker is accepting as a security, that is the debentures. Now, the goods, as far as concerned that mostly that the goods when we are talking about that every goods has its own value, it is all right. But with the goods when we are talking about, then we will find the what is the demerits of it, that every goods according to the commercial rule or the valuation, that there is a depreciation rule will apply. That means a machine suppose which you will have today, then you will find that after 3 years, today if it costs the 1 lakh rupee, after 3 years the cost will be determined automatically, that is 50,000, because the depreciation rule applied on it. The machine's cost will go down. Though earlier bankers were not forthcoming the advance against goods of documents of title to goods, now more and more secured advances of the scheduled banks in India are against goods. The reason, as I have already mentioned before you, because the cost, it is we will see in the latter part, that is the gold, that is it is also taken as a goods, but as far as concerned that the other goods when we discuss, then you will find that it is a risk, and due to that the methods, the mechanism, that is the depreciation. So, the advantage of the goods as a security, there are some the advantage which is very important, but at the on the other hand we will find there are demerits also. The goods have a ready market and as such can be easily sold, unlike other kinds of security. As far as concerned, the other kinds of security that you will have to ensure that entitlements or the other things, good which you are positioning, and if you have the documents, then it is very easy to sell out. The valuation of the goods can be easily done, as it is on the basis of applying the market price, as well as that you will find that what were the cost at the time of the purchasing, and after applying the depreciation rule, the value can easily be determined. And the third advantage is that the banker gets a tangible form of security compared to unsecured advances, which in case of default by the narrower can be realized by sale of pledged goods. And finally, the advantage of accepting the goods as a security, that is, advances against goods are normally given for short periods, and therefore, the risk of the banker is considerably reduced, that if you have sold out that, then earlier you can take the advance money in favor of that goods. That is why it helps to bear some, you can say, the less loss towards the banker. But as far as concerned, that the merits is always there are the other part, that is the demerits. So, the disadvantage of the goods as a security, there are the four things which I have highlighted before you, that is, certain goods are liable to perish or deteriorate the quality over a period of times, thus resulting in reductions of the value of banker's security. I will explain that. The bankers may find it difficult to store the goods. The third one is transporting of the goods from the borrower's premises to the banker's premises and thereafter to the market in case of sale is a considerable costly and time consuming affair. And finally, it is talking about the value of the security in certain cases, more particularly in electronic consumer goods, are subject to wide fluctuations. I have told you that every kind of the goods, if you will see that as far as concerned, that the machine or the other goods which you have taken as a security, then it will the value always, you can say, the depreciation value will apply. So, there is no doubt about it. There are some where the depreciation value is very high, and particularly when we are taking about some of the examples of the electronic device, that is, it is a very risk as far as concerned, that the what, for example, suppose you have accepted as a goods the today, and after the for example, suppose I am taking example that okay, a laptop has been taken as a security, that okay, the laptop which cost today, that is the 1 lakh rupee, it is all right. You have taken that the granted the loan for 1 lakh rupee, in place of that you have taken as a security, that is the laptop. After 3 years and the 4 years, you will find that the laptop is not functioning, and it is, you can say, like a goods not for the use. It is only that you will find that it is a small things, and it has no value. Only why? Because it is outdated. The program which is running and that may not be work in the tomorrow, and you cannot install on that because it does not have capacity. So, nobody will buy it, and if you do not find the buyer, how you can sell it? That is the problem. So, the as far as concerned the goods, this one of the very you can say the demerits which is available when the bankers is accepting the goods, he has to take care of it. Then the fifth one is the life policies. As we know that the life policies, every person's for its own needs, he has some sort of his purchasing or investing money for the helping of their you can say the survivor or their dependent as any mishappening take place with him. So, the life policies, as far as concerned, that it is also accepted at the banker as a security. A life policy is taken for two purposes, as I have already mentioned before you. It is a source of income for the dependents of the assured in case of his death, and the second one is it is an ideal form of saving, since along with the income tax deductions on the premium, loans can be raised on the policies in times of need. That the two important things, as I have told you, that why the persons are investing money on the life policy insurance. The one that is it if any misfortune happen like this, the death in that circumstances, some extent it will help to their, you can say, the dependents. And the second thing is that it is, if you are investing money, that the some amount that is to some limit that the policy holder will get the exemption from paying the income tax. That is the second benefits which you will have. And that the third things is, as question, that by it helping you, that in using that policy, it may help to, you can say, get some sort of, you can say, the loans etc. in the need of your time. Advantage of the life policy as security, there are the three things which I have highlighted before you. The life insurance business being highly regulated and permitted only to the companies having sound financial health. The banker, no doubt, the realizations of the policies which will done without any difficulty in the policy and claim are in order. I will explain that. The assignment of the policy favor of the banker requires very few formalities, and the banker obtains a perfect title. And the third one is that the policy is tangible security, and it is in the custody of the bank. The banker only has to ensure that the regular payment of premium is made. So, three things, the three things has to be taken into consideration, but these are the benefits I have told you. As far as the entitlement, it is already mentioned that the assured person's name is there, and the amount is also mentioned, that what is the sum assured of that. So, there is no need to determine, and the reason behind it, because it is the regulated by the highly authority, and that is ensure that there is realization of that amount, because the return is normally that we have expense that the life insurance corporation is nowhere, you can say, failed to return any kind of, you can say, the maturity of any policies. But at the same time, there are some of the disadvantage, and the disadvantage are, if the premium is not paid regularly, the policy lapses, and reviving the policy is complicated, because the amount, the policy which you are keeping along with you, or the bank is retaining, it is very important that the premium must be paid. If regularly premium will not be paid, then it will be treated as a lapse, and there is no any kind of, you can say, the return. There are very less return, you will find that the 30%, 20%, it depends on the terms and conditions when the insurer insert into that, or into the agreement. The second demerits is that the insurance contracts being a contracts of utmost good faith, any misrepresentations or non-disclosure of any particulars by the assured would make the policy void and enable the insurer to avoid the contract. That is very important, that the insurance policy is made between the companies and the insurer persons in a good faith. And when we are talking about the good faith, that means it is assumed that the person is disclosing everything. For example, if you are taking the term life, then you will have to undergo through the medical checkup, and suppose if you have produced the false documents, you might have some sort of, you can say, disease, and the later on, if you have not mentioned that I am facing such kind of the problems, and immediately it happened, which can be said that that is not possible in a day. So, when you enter into that agreement, so in that circumstances, it is very, you can say, the one of the major disadvantage, because that contract will be declared the void one. So, the policy may contain special clauses which may restrict the liability of the insurer, and at the same time, as I have told you, that the conditions are there, and the one conditions which I have mentioned before you, that if you are not paying the regular premium, you are not entitled to get that much amount in the maturity. Now, the sixth kinds of, you can say, the loan, or if when the banker is advancing, that he is accepting the gold loan, that is in terms of the, sometime it was in the very popular that the it is accepted by the banker itself. So, the banks give loans against the gold ornaments for agricultural as well as for non-agricultural purposes. The nature of charge created while giving this type of loan is a pledge. The banks allow a overdraft also against the security of gold ornaments. So, it is, we can say that it is very easiest, and we have expense even in the like the landed property. Not sometimes there may be flexibility you will find, but as far as concerned the gold's prices are always increasing as far as concerned what we are experiencing in our lifetime. So, the banks is accepting the one of the another kind of you can say the security that is in form of the gold. The book debts. So, borrowers can take advances by assigning book debts in favor of the bank. Section 130 of the Transfer of Property Act permits assignments of the actionable claim, and the procedure to be followed is there are the three procedures which has to be followed. That in that cases the book debts can be accepted as a security. The number one is the assignment must be in writing and signed by the transferor or his duty authorized agent. Again I am repeating it. It's that it's section 130 of the Transfer of Property Act which states that the assignment must be in writing and signed by the transferor or his duly authorized agent, and the second one is notice of the assignment in writing must be given to the debtor, and the third one is assignment may be absolute or by way of charge. The absolute or by way of charge, that is very important. Now, the book debts when we are talking about, that must be certified according to the section 130 of the Transfer of Property Act. As far as concerned that the assignment which is permissible or actionable claims and the procedures, what are the procedures that has to be laid down. There the three procedures has to be followed. The first one as I have mentioned before you, that is the assignment must be in writing, that is very important. The assignment must be in writing and assigned by the transferor or his duty authorized agent, that is the persons to whom the duty has been authorized. And the second thing is a notice of the assignment in writing must be given to the debtor. That is very important as far as concerned that the persons who is willing to execute that, then the notice must be given to the debtor. And the third one is the assignment may be absolute or by way of charge. That is also three things is talking about, these are the important. Now, the eighth one of the security which is granted, that is very important, and as far as concerned that the bank is taking itself the surety. Now, that the fixed deposit, as I have told you, that is one of the you can say the kinds of you can say the deposit which is accepted by the financial institutions as well as the bank. There is already we can say that is the fixed, that at the time of depositing money, at that time the rate of interest and the maturity value is fixed. So, there is no you can say the questions about as far as the determining what would be the value at the time of you can say the end of that. When money deposited by a customer is not repayable on demand and is payable on the expiry of a specified period from the date of deposit of such deposit is called the fixed deposit. The banker evidences deposit by issuing a receipt known as fixed deposit receipt. Now, at the present time if you will see that how it happens, as I have told you that the bankers is also involved in that kind of activities and the other financial institutions are. Whoever may be that when they are accepting the deposits in form of the fixed deposit. So, the fixed deposit is also known as the term deposit. The term deposit means at the time of entering the terms and conditions are already mentioned. As I have told you, the bankers has to return the customers money when the customers demand. Even the bankers is not return that money when the bankers accepting the deposits from the public in terms of the fixed deposit. That means, the fixed deposit will not be returned, but at the same time there are some flexibilities may be granted, because the money when the persons are depositing in the bank or in the any financial institutions, even where it is with the terms and conditions. At the time of the terms and conditions, sometime you will find that some of the companies they are talking about that before the certain period that cannot be withdrawn, and in the remaining period as far as concerned that after the expiry of that the minimum you can say the duration which has been prescribed, it is entirely depend on the to whom the customers is entering. The terms and conditions may be little bit varies from the one company to another company, the one financial institution to another financial institution, one bank to another bank, that might be little bit, but it is in accordance with the rules or the guidelines which is issued by the Reserve Bank of India to regulate the fixed deposit or the rate of interest of the fixed deposit that is regulated by the Reserve Bank of India. But there is a flexibility amongst the banker or the companies that within that limitations that varies. Sometimes you will find that there are various kind of, you can say, the rate of interest even in the normal cases. If you will see that as far as concerned that it is based on the persons who have some sort of money who has received from the company in at the time of the age of superannuation. So that the senior citizens might be the same kind of, you can say, the same duration of fixed deposit, he will get the little bit higher interest rate. So it is under the provisions has been made. So there is no any kind of, you can say, justification that other things can be done, that why the senior citizens is entitled. The logic behind it or the reason behind it, because the senior citizens only we are talking about, that means he is not in a position to earn money, because the system which is existed in our country, that after the attaining of that particular age, that you will be superannuated and you are not entitled to be employed for others in any of the sector. That might be because the person has found that after completion of that age he is not in a position to discharge his duties or whatever maybe the assignment is given to him due to the age factor. That might be the reason that the money which he has that is he has received, or you can say he has earned during his lifetime, and now his life, or you can say the survival, is depend on the basis of it, the which you can say the interest which you will receive from the fixed deposit, their life is based on it, or you can say his life is dependent on that the sole means for their bread and butter, or you can say the survival. That is the reason that some sort of, you can say, the relief has been granted to them by extending some sort of, you can say, the social security, and by hiking the interest rate as comparison to the other peoples which is available in the same period. The second, the very important aspect which I have discussed with you, that as far as concerned, when we are talking about the issue the fixed deposit, then there is no any kind of the you can say the questionable as far as concerned. The most important merits of this fixed deposit documents is because it is having with the institutions. I am not saying that some of the institutions, the financial institutions, they are not facing crisis, but you will have to check out that when you are accepting that the whether. But as far as concerned that as a scholars of the law or as scholars of the banking law, will have to understand the each and every the financial institutions or the banking sector, whether it is nationalized banks or you can say it is a private bank, it does not matter, all are regulated by the same rules, the regulations, and that is regulated by the Reserve Bank of India. So nothing to be worried about it. As far as concerned their affairs, that will be checked out by the Reserve Bank of India from time to time. So the one of the very significant features of this, that the entitlement of the persons, his name is already appear, and you can check that what is the determination of the value is also already fixed, it is predetermined, because the certificate which is issued by the concerned company, or you can say the financial institution, or by the company, then you will find it is mentioned that who is the owner of that, what is the amount of that, what is the sum value which is deposited in terms of the term deposit or the fixed deposit, and what would be the you can say the last one, what we are calling, that is the maturity value. So that is already mentioned under the certificate itself. So easily it can be determined on the basis of it, because it appears in the document itself, what is the period of it and other things. But as far as concerned, one of the demerits that of this instrument is that if it is the prematured, and there may be the check the authenticity with the bank, if you can ensure, or with the concerned company, then there is no any kind of the risk as far as concerned to retain the documents. There is less chance of fraud. Then the next one is, that is the supply bills. Supply bills, when we are talking about, it is a kind of security, and that security is the supply bills arise in relation to transactions with the government and the public sector undertakings. A party might have taken a contract for execution and is entitled to progressive payments based on the work done, for which he has to submit bills in accordance with the terms and conditions of the contract. Again, I am talking about that there are some of the authorities where we can ensure that the payment will be made, but why right now the documents can be accepted by the banking company as a supply bills. As I have told you that there may be with the government, there is a very kind of, you can say, the contract between the persons who is supplying the materials and other things to the government. So, there is a, you can say, the long relationship between these two agencies, which establish that they are accountable each other, as far as concerned the supplying and as far as concerned the making payment. So, anything which is supplied to the government, maybe that there may be some the technicalities it might take place, but the government is liable to return that money. And as far as concerned the above we do not find that any kind of the institutions which can be held responsible. So, the supply bills arise in relation to transactions with the government and public sector undertakings. It is simply that you will any kind of, you can say that the undertakings the transactions undertakings, that is confined to the two words, that is the government, and as far as concerned the other things, the public sector undertakings, the public sector undertakings. A party might have taken a contract for execution and he is entitled to progressive payments based on work done, for which he has to submit bills in accordance with the terms and conditions of a contract, and as soon as he will comply that, he is entitled to get the payment from that, and on the basis of it can be realized. And the banking sector are accepting such kind of terms and conditions which is between the persons who is giving as a security, and what is that? That is the agreement between the banker and between the persons who is willing to borrow the money from the banker and the other that is the either the government or it is a public sector undertakings. Now, the last one is the vehicle financing. Sometime you will find that the vehicle financing as far as concerned when we are talking about, then it is only the hypothetication where we can say it is a hypothetical basis that when the banker is financing, then he is keeping the key and the other things, and he thinks that we have taken as a the security, although that things is the goods is not in his possession, it is under the possessions of the persons, as I have told you the depreciation. The last part which I like to tell you the two things, as you have the secured loans and unsecured loans. The secured loans, when we are talking about, that is the antithesis of the unsecured loans. These loans are given by the banker not merely based on his confidence on the borrower's future financial strength, but also based on the present net worth that is able to give a banker to reply and recover the money lent to the event of his failure. On the other hand, when we are talking about the unsecured, as I have told you that the unsecured means it is only the hypothetication that we have. We can say that as far as concerned the unsecured loan is one for which the banker has on rely upon the personal integrity of the borrower. So, the secured means the where the government has already, so the banker has already taken all sorts of, you can say, security. Unsecured means where the banker has relied on the you can say the status of the persons only, on the basis of it he granted loans. So, these things which I like to say with you as far as concerned that what kind of the securities generally banking is accepting. So, these things which I like to share with you as far as concerned the securities which are accepted by the banking sector from the borrowers. Thank you very much.